Welcome to Neppy Invests the World. Today I'm going to drink some milk. Talk about milk. So A2 Milk is an ASX listed company. They're actually out of New Zealand, and just go to here. You can see they were founded in 2000 in New Zealand, and you can just see here on the bottom here we've got the amount of revenue. So you can see they're just a consistent revenue growth since really about 2010-11, and all these deals they've made. They listed on the ASX in financial year 2015. They launched A2 Milk in 2015, but it's really taking off now. So this is for a presentation they released about a year ago, so they've even built more since then. And this only takes into account, as I mentioned, this was released last year, financial year 19 revenue of 1.3 billion. So we'll look at A2 Milk results in a minute. But for full disclosure, I am a holder of A2 Milk, but I'm not a drinker, so it's maybe a little bit too expensive for me. I just used the normal milk. So I did buy in at $2 in early 2017. I thought it was expensive at that point in time, funnily enough. And this A2 Milk has almost become a 10-bagger for me. So my ultimate goal is to get a 100-bagger, but this is gone 1/10 of the way there. So if you don't know what a 10-bagger is, it just means the value has gone up since I bought it by 10 times. So a 100-bagger will be by 100 times. Now, I'm not going to get into a discussion about the science behind the benefits of A2 Milk. There's a lot of people out there who believe it is beneficial for them. A lot of it's anecdotal evidence. I haven't seen or read any solid research behind it, any peer-reviewed articles or anything like that. I was reading an article last week about some researchers in China believe A2 Milk is beneficial for children. So A2 Milk is just the science behind it. It's just a sort of different protein, A2 protein, that a specific cow produces. Most cows produce, or normal cows produce, A2 and A1 protein, and this one specific cow just produces A2 protein. And A2 Milk has been very good at marketing marketing the perceived benefits behind A2 Milk. So what do A Milk do? Well, in my opinion, if you can explain what a company does in one short sentence, that probably is a good buy, because it even means it's a very simple company, and very simple companies most likely do well, or you know what they do. If you can't explain what a company does in one short sentence, it's either a very complex business or you just don't understand. So A2 Milk is very easy to understand. They just sell milk and milk-related products. So on their webpage here, you can just see, you can go scroll through what they do. So the biggest product is the sort of the infant nutrition or infant formula milk. So they have actually different different formulas for different age groups. They also have, scroll back to this one, nutrition for mothers. So this is not for infants, it's actually for pregnant women. So, more power to them. They also have powdered milk, it's both skim and full cream, and then the liquid milk, light, full cream, and of course no fat. So a very simple product stream, and they're in 3 primary markets, which I shall get into later. And those markets actually have different, their products, different products, specialties, I suppose. Like America is liquid milk, China is more of the infant formula, and Australia is probably a combination of the few. So that's what they're into. And in regards to perceived benefits, whether real or not, A2 Milk, those perceived benefits give A2 Milk pricing power. I went shopping today, and grocery shopping, and I did actually have a look at how much each individual milk costs. So a 2-litre A2 milk costs per litre about $2.65. The home brand 3-litre milk, what I usually get, is only $1.20 per litre. and the dairy farmers 3 litre is about $1.75 per litre. So you are paying a premium for A2 milk because of those perceived benefits. But there are some risks in that. If those perceived benefits start to dwindle or are proven to be not real, then that pricing power will disappear, and who knows what will become of A2 milk. But it's been a long time since they've been, around 20 years, and they've marketed A2 milk very well since then. So they released their results last week. So let's get caught into their results. So straight into the income statement. So here it is, the income statement. So the first line is always the sales, and they've grown sales from 1.3 billion to 1.7, so growing strongly. Gross margins, I believe the gross margins there is 56%. So that's pretty high. I was actually listening to a podcast this morning, and there was this one business they were talking about, I think it was WiseTech, and the analysis was saying, their gross margins are 50%. That's really, really high. So A2 Milk's 56%, so it's more than a tech company. So that just gives you an idea how much pricing power they do have. And down below, profits are up by about 32%. I think sales are up 33%, and earnings per share fairly similar. So the operating margins are around 32% too. Go to the next page. So we look at the financial statement and the cash flows on this page. So they've increased cash by nearly 400 million. That's a fairly big increase in cash. So that could have been through operations, or maybe it was a capital raising. It was not a capital raising, it was operations. Because actually, if you look at net cash flow from operating, 427 million. And below that, in the investing, not much capital expenditure there. So just look at payments for property, plant and equipment. So very little capital expenditure. So all their cash from operating is going to the bottom line. And that's how they just increase the amount of cash. Funny enough, in the same podcast this morning, I was talking about how much cash WiseTech had on the books. They had 200 million on the books. And they were just, not gloating, but they were just admiring how much money WiseTech has in cash. Yet here we are, A2 Milk has 4 times that amount of cash. And the other thing I was talking about is WiseTech has no debt. And they were just, WiseTech has no debt. And here we are, A2 Milk has no debt either. So it just shows you A2 Milk has been a fascinating, brilliantly run company, growing quickly, total equities increasing, so everything's going up, no debt, operating cash flow 427 million. I'm actually a big fan of a business having cash in their books like A2 Milk. There has been a lot of chatter about this in social media, that with interest rates down, you should be using that cash, but I believe having cash on the books provides flexibility and or is a safety net. And we've seen that in the last few months or last 6 months, where a lot of companies have had a lot of debt, no cash. And when the COVID-19 has hit, especially these travel companies, they've had to raise a lot of they've had to do capital raisings at a big discount to stay in business. So I'm a big fan of cash. You never know what's going to happen in the future. It also gives them the flexibility if they do maybe want to make an acquisition, all cash, they can. So next I'm going to talk about the presentation, not that one, but we'll start on this one. Sort of a geographic breakdown and a product breakdown of the revenue. So as I mentioned before, the 3 segments, ANZ, which is not the bank, but is the Australia, New Zealand. It is still their biggest market, but China and other Asia is catching up very quickly. And USA is just sort of in the infancy, but fairly good growth there, almost double their revenue in the past year. And if you look at EBITDA, which is sort of a proxy for operating cash flow, I'm using it here because most companies are, fixated with EBITDA. I can see America with these parentheses means they're running at a loss. So spending a lot of money in marketing in America. And I think they've just gone into Canada, if I was reading correctly. And on the right, actually you can see also UK discontinued ops. So they've pulled out of UK, and more than likely they'll eventually go back in there once they've conquered USA, I have a feeling. The product segment revenue, so you can see Infant Formula with $1.4 million is their biggest source of revenue. liquid milk is, well, it's a long way behind, and powdered milk, I think that's what this other nutritional is. They're all growing at a good clip, about 30 or just over 30%. So that's good for them. Yeah. And I think the other, this one was just showing you just persistent growth. They've got half-year revenue, EBITDA, and full-year basic earnings per share. So each and every half, they're just growing at a good rate. Nothing to be concerned with yet with their story. So that's all I've really got for that. So it's with this sort of thing, it's earnings per share 52. So with a share price of about 18, they are running at a PE of roughly 36, 37. So it is fairly expensive, but they are growing at 30% or greater. So the PE ratio of on a high 30s is not that probably not that high, but one thing I do like to look at when you are talking about a growth company is just go back in their past to see what sort of PE ratio they were running at. And in actual fact, I do this for most companies just to see what the historical PE ratio is for a company. So a few years ago, I did buy some banks for a short-term hold because their PE ratios were at a multi-year low, and they did actually run a little bit hard after that. And I think the banks could be running at a PE ratio quite low now, although earnings have probably decreased. So this is a website called Guru Focus, which you can pay a little bit of money to get all the financial statements and metrics for the whole, history of a company. So in this line here, we're going to see PE ratios. So the A2 milk has been traditionally quite high. In fact, they're almost at a 4-year low with 36.88. So that's current. Price to book, it's also at a low too for the last few years, 12.66. And then some of the other metrics, I just like to look at the trend. Trend's all up here, so you can't really debate that. And sometimes I just like to look at graphs. This one here just looks at the price to operating cash flow. You can see it's at a 3-year low. There is right on 30. When you get that 30 price to operating cash flow of about 30, it bounces off that, and we're nearly at 30, about 33.2 now. There is it is high, so right now it's probably running at a good value if you do want to buy in. If you take a look at, you can actually compare also to their competitors around the world. So just look at the PE ratio, and you can see they are historically fairly high. So A2 milk is right there, so PE ratio is fairly high. Actually, it's not the PE ratio, it's something else. What was I looking at? I think it was profitability. Yeah, it was gross margin. So gross margin, I like to look at this because this is sort of how well the underlying business is going. And here, A2 Milk here has the highest gross margin, so above 50%. So significantly higher than most of their competitors around the world, except this one big one here. I'm not sure what that company is. It's a fairly big company though. Maui ASA, so I'm not even sure about that. So they run out of have a gross margin above 50%, so it's higher than competitors. So it's something I'm going to keep an eye on, because if we do see their gross margins being eroded, it looks like the growth profile might be over. Well, the ongoing growth profile they've been undergoing might be over. So the next thing I'm going to look at is just have a look at this. This is just comparing to another company, mining company. Just show you how different a value play is, which is Base Resources, which is the last company I went through, to growth story, which is A2 Milk. Base Resources, actually, look down the bottom, they have a dividend. A2 Milk doesn't, so that's the one good giveaway, especially dividend revenue, that it's a value versus a growth. And some of the other numbers here, especially when you look at price to book, it's almost 13 times A2 Milk from Base Resources, and enterprise value divided by operating cash flow or free cash flow, I like to see numbers less than 6 for value plays, and when you're talking about growth plays, this number here, the main thing I look for is the trend, and to see if it's at the low historical trend for the company. So you can just see here massive difference in valuations here when you look at the growth play versus the value play in basis resources. Keep saying bases, but it's base resources. Chart wise, I'm just going to look at the company price today because I can, and I'm recording this at 11:30, and the price is up 1.56. Woo! Now you shouldn't do that. It's just daily fluctuation. So I'm just going to look at. First thing I'll look at is the 5-year chart. They've been in. Oh, am I not logged in for some reason? That chart didn't want to work. So just look at the 5 years. They've been on the ASX for just over 5 years. Come on, work. And they came in around a price of, was it 50 cents or something like that? Maybe even lower than 50 cents. So they've gone from 50 cents to $18.53 and let's have a look exactly what they were. So funny enough, when they listed, they just did drop quite a bit in price. So it's like 45 cents or so, and then they just started going up. So if you actually did buy when they listed, you would have made 36 or just a bit more times your initial price, which is not quite a 100 bag yet, but a consistent increase in price through the years. One thing I did notice here is, though, we tend to see a peak in price, well, not a peak, but sort of a price decreasing to around, I'll just zoom in a little bit more, to around October or November. You can see this little low here, this valley here, and this valley here, all around the same time, just before or around the AGM. And as soon as it gets to the AGM, it just shoots back up in price. I have a feeling A2 Milk doesn't give guidance for the next year during their full year results, but they'll probably give guidance through at the AGM. And when they give guidance, it's probably better than forecast. That's why the share price starts going up. So potentially that's going to happen again. They didn't give guidance out this year. So if the price, just follow this 100-day, that's a weekly, 100-day or 100 weekly moving average, and just follow that down to October, you could be seeing a price of around $15, $16, and that could be good, really good price to hop into the share if it does go down there. So right now it's probably fairly valued based off this. Looks like $20 is, just go to the year chart. $20 is a resistance, obvious resistance here. It's hit $20 once, twice, 3, 4 times and bounced back. Psychology is a major thing when you're talking about price movements of companies, and round numbers tend to be a significant psychological barrier that companies have to get through. So $20, people just say, oh, I'm going to sell this when it gets to $20, and that's what's happening here. People say, oh, I'm going to sell at $20, and they sell here $20, sell here $20. Once it gets through $20, all those people who wanted to sell at $20 are gone, and maybe 25 will be the new barrier. So it's funny. So if I go back here, you can see here there was a massive jump in price at the AGM. I assume the 19th of January or 19th of November was the AGM, and I will actually verify that. Go back a year. 19th of, so 19th of November last year was their annual, or AGM, annual meeting presentation, including Outlook. And that's why the price just jumped. I haven't looked at this, so here we are, Outlook. So they gave an Outlook and gave some numbers, and based off those numbers, the market was really excited, and we saw a massive increase in price, and the price just kept on increasing. You can see during COVID, the price did not A2 milk was not affected by the virus, and that's why you did not see any marked decrease in price. In fact, the price kept going up. We have seen a little bit of a retracement back to the 100-day moving average. This has in the past year been sort of a, not a resistance, support line, and looks like it's still being a support line. So that's it for now. I'll just actually go back to the 19th of January. You can actually look at every single day's trading. And yeah, jumped up 11.23% at that AGM. So that's all I've got for today on Neppy Invest the World. Hope you've enjoyed a look into A2 milk. And don't forget, I'm not a financial advisor, so I'm hoping you're not getting any financial advice and not making any decisions based off this video. If you do need financial advice, make sure you seek out a professional, a financial advisor to help you. And that's it for today. I hope you enjoy the rest of the day and go A2 milk.